Every few years, someone declares the death of the dollar.
Yeah, but Alex, also every few years they're exceptionally wrong.
But maybe, Sinead, this time is different.
All right, so welcome to But This Time It's Different, where we unpack chaos in the markets, tech, and literally anything else that we feel like with an eyebrow raised. I am Sinead. I am a multi-asset investor and defense and space economist based between London and East Coast USA.
And I'm Alex, London-based technology and finance writer. So, before we dive in, what are we doing here? Why does the world need two more people talking about finance and markets?
There are way too many podcasts, you're right. But I guess there's a lot of noise out there at the minute. Something that we're interested in is the absolute bullshittery of the panics, the pumps, the pitches that we come across between tech, finance, geopolitics every day.
Exactly. I think markets are messy. The world feels like it's on fire a lot of the time. And I think we tend to notice, having read kind of finance and technology media for several years, knowing quite a few of the people who write it, that certain memes appear, certain takes get endlessly recycled, bad ideas that start on Twitter suddenly find themselves on the mainstream, and podcasters suddenly find podcasters suddenly themselves advising the White House.
So Alex, today's podcast.
So today we are talking about de-dollarization. It's the idea that the US dollar's influence on the global economy is starting to fade. I mean, we've had people have gone back and forth on this one for a while. There was a wave of this commentary back in 2022 when the US introduced sanctions on Russia following the invasion of Ukraine. You had certain oil transactions suddenly being denominated in local currencies. You had various central banks loading up on gold because they suddenly became very aware of the potential of sanctions. And then suddenly it all kind of petered out. But thanks to certain events on the other side of the Atlantic, the dollar has plunged about 12% since the start of the year. Gold prices, as have been predicted by libertarians on corners of the internet for a long time, have suddenly begun to rocket, and serious people, not just Reddit posters, beginning to ask some of the big questions about this.
Right. And this is honestly one of my favorite topics, so I'm glad that we are starting our podcast with this. So just this week, one of the big FT columnists, Rana Forhar, wrote a pretty sharp piece in the FT arguing that what she once called the kind of dollar doomsday scenario. And this is a piece she actually wrote a couple of years ago, which kind of predicted the end or the de-dollarization that we may or may not be seeing today. This week she wrote that it might finally be unfolding. And she kind of said, maybe I wasn't totally wrong the last time, maybe my timing was off. And she kind of looks at three main points, right? The first is the US economy's dependence on asset bubbles rather than real production. And I'm sorry, just going to name and shame Tesla here. Skyrocketing private sector debt, especially through ultra shadowy kind of private credit markets. And my favorite one, the failure to regulate systemic risks, including crypto, but other risks which are probably way more perverse and harder to understand and see. So in her view, the global order, which is built around the dollar, which, to investors really is cheap liquid US assets, most of them in a bubble, is actually starting to look more fragile than it has in decades.
I think you're being harsh on Tesla. I think it's completely normal for a car company to report a significant portion of its earnings jump. I think one of the quarters last year, I think 25% of one of their earnings jumps was in unrealized Bitcoin gains. That's what any
You're
normal
right.
car company.
You're right.
That's what any normal car company does, Sinead. But yes, this is the backdrop for today's conversation, because while these kind of dollar doom predictions come around every few years, we're going to ask, is this time really different?
Right. And it's interesting because here's the thing. A lot of the coverage still falls into two camps. You have the coverage that says it's eternal, it's never going anywhere, this is the hill I'm absolutely willing to die on. And then you have everyone else that's like, the US is about to become Venezuela by Tuesday, and this is a hill I'm absolutely willing to die on.
Yeah, I think those people should killed several times over by now. I thought Weimar hyperinflation has stubbornly refused to appear, but instead of just rehashing why tariffs are bad and protection is inflationary, which it is, we thought it would be more interesting to dig into some of the real alternatives people are talking about, because if the dollar really is slipping, even if a little, it matters what might come next. And spoiler alert, it's not going to be Bitcoin, and it's not going to be central bank digital currencies. And we're not just saying that because neither of us actually knows what they are.
No, but we did have an incredibly long discussion about this. Anyway, we've decided it's not going to be central bank
It's
digital
not going to
currencies.
happen.
All
It's
right.
not going to be. It's
So
not
hit
going
me
to be
up.
Bitcoin. So
So
let's
yeah, let's jump in. What
okay.
could it potentially be?
Let's start with the obvious contender, which is the Chinese yuan or renminbi. So, Sinead, if you were a China booster, and I know
Oh.
that you can't get enough of Xi Jinping, you're always saying that. Like, what's the optimistic case you'd make?
This is tough for me because I am one of the biggest China hawks that I know. Look, okay, so China is already the largest trader in goods in the world, and it has actually been building an entire kind of parallel financial system to the USA. So we have bilateral swap lines with countries like Pakistan, which we will get into more detail about, oil contracts that are now settled in Yuan, which we never thought would happen, the Belt and Road Initiative, which kind of ties projects to Chinese capital globally. The idea is really simple here. Create enough demand for the yuan outside of China, and you can slowly erode dollar dominance. Which, and you have to hand it to the CCP. There's a long-term strategy here. What we're seeing is not an overnight swift collapse of the dollar, but this erosion is actually happening.
Yeah, but there's the kind of first hurdle, which is trust. A currency is really just codified trust at the end of the day. If you want to kind of transact in something, if you want to use it to store value, you kind of have to believe that the rules aren't going to change overnight, that the courts are independent, that you can move money when you want to. Like, the world doesn't use the dollar because they love America. They use it because they trust US institutions like more than the alternatives. And China really struggles here because
They trust it more than the alternatives right now.
yeah, trust in China could be about to surge. But yes, the Communist Party can and like does intervene in the financial markets. It rewrites regulations when it feels like. It restricts access to capital flows without warning because, you know, if people get upset about it, like they're not going to vote them out of office. So if you're running a sovereign wealth
No.
fund or a multinational bank, like that's pretty terrifying. And if you're a foreign investor, you can't even invest. You can't even invest on the kind of Chinese stock markets and bond markets without going through a huge, rather convoluted licensing process.
To be clear, we've seen large US investors enter the Chinese market within the last 6 months, leave the market.
Yeah.
For exactly these reasons.
Yeah, and China is very, very happy taking out its own like domestic success stories. Like, I don't know if you remember when Jack Ma of Alibaba fame, China's most famous, he just vanished.
No, I mean, when you say taking out, quite literally, people thought he was dead for a while, and then he like literally reappeared one day, and everyone was like, "Oh my god, thank God, Jack Ma is still alive."
Yeah, and like Xi Jinping is ultimately this massive boomer who basically hates a lot of tech and thinks it's frivolous. And they went through that phase. Was it in 2020? Where this kind of went round different bits of the kind of Chinese tech sector, massively like changing regulations.
Yeah.
Yeah, when I was bored a couple of years ago, I went through this phase of like buying and selling various Chinese equities, and one of the stocks I held was in this company called Tencent Music Entertainment. It was one of like Bill Wang's like like big holdings when Archegos imploded, that tanked it, and then the Chinese Communist Party came in and just like whacked it like round the head with a spanner as well. It was kind of awful. Like so a whole
So
like
wait,
sector.
we shouldn't invest in you to go into emerging markets.
Yeah, and we've also seen the Belt and Road Initiative. It turns out that Chinese debt diplomacy comes with some strings attached. So the one I remember is when several years ago, they lent money to Sri Lanka for a port project. And then, if memory serves, they then basically like seized control of it and tried to turn it into a military base and, you know, parking submarines in it. There was this huge public backlash against the government. The Sri Lankan government got voted out of office at the next election. That was such a good idea. So, you know, Xi Jinping can travel the world pitching China as the new trusted partner for global trade and finance. And
which right now he's absolutely doing in light of the US erosion of trust. I mean, this is his thing at the minute.
If it can happen to Jack Ma, it can happen to anyone. And no one serious wants to park hundreds of billions of dollars somewhere when they may never allow to be able to get it back.
Right, which is why VCs park their money there.
Are they still parking their money in China? I mean, I feel like
this is a thing they've divested.
Rest in power.
Right, Sequoia China gone. But that's that brings us to capital markets, right? So second, even if you trusted the yuan, you still need this kind of deep, safe, liquid market to park those trillions, right? And this is a huge problem for China, right? The US Treasury market is still by far the deepest and most liquid market in history we've ever seen. So if you're a central bank, I mean, we're not talking about like Sequoia that are going to put like 50 million, or even think Adam Newman level, we're going to invest 400 million into like fucking thin air or something, right? If you're an institutional investor and you can buy and sell hundreds of billions with a B in treasuries without blinking and without moving the market too much in the US, you can't do that in China, right? China's bond and stock markets are big, sure, but they're literally nowhere near as big. And certainly, as you pointed out, they're just not as accessible as the US. So foreign investors need special licenses just to get in, ownership limits, capital controls, exactly as you've mentioned already.
Yeah, I mean, and earlier you were talking about the kind of swap line that Pakistan asked to be extended.
Yeah, I mean, it's not just deep capital markets that the kind of global reserve currency is going to need. It's very it's very well formed monetary markets as well, right? China does create these deep liquid markets, but they're only for specific trading partners, not for the whole world. So the US currently is the lender of last resort for the fucking whole global economy, right? Like, that is basically what the Fed is doing at the minute. The Silicon Valley Bank thing, I'm sorry, lender of last resort for the global economy. China does this for specific countries, trading partners, not for the whole world, okay? So take the way China finances the emerging markets. That's done through bilateral swap lines and kind of development lending for ports and infrastructure projects. Swap lines are basically giving access to a partner of choice for them to be able to access your currency when they need to. They're most often used in emergencies. So China has swap agreements with over 40 countries. Pakistan, as we just discussed, has a $15 billion swap line with China and has just this week expanded that by another 1.4 billion, I suspect, as a way to shore up its finances in case it ends up going to war. Argentina, over $18 billion. Brazil, its major trading partner. Russia, post-Ukraine sanctions and the shift away from the dollars. But instead of building this truly open global capital market system that the US dollar did after World War II, China is very much building these closed loops. So the liquidity is there in China, but again, as you've said, Alex, it's restricted, it's project specific, and so politically controlled.
You mean these trade flows aren't neutral and fair and,
Define neutral and fair. I mean, Pakistan, for example, chose not to go to the IMF, which is kind of would be seen as US controlled, and instead went to China. Because I think for a lot of the emerging markets that are trying to access capital, the IMF comes with terms and conditions that are not super favorable to their politics.
Global financial machinery is basically held together by kind of glue and string at the back. When you talk to anyone who kind of works on like bank lending or payment systems, it's actually quite hard to like re-gear all of the stuff. It's not a case of just changing what currency you're paying someone in,
right.
You're on like a Revolut screen. It's a little bit more involved than that. And Yuan has made some progress here with his close trading partners. Globally, something like 5% of international transactions are settled in the yuan. And this is the world's second largest economy.
5%? Wow.
And it's 5% versus like close to 90% still involving the dollar. Yeah, there's also that like meme is that often you get a certain kind of person who misses the gold standard who goes like, what's the US dollar backed by? And then there's this meme of someone doing this kind of panoramic sweep over a load of like US aircraft carriers and fighter jets and military helicopters and saying, this is what the US dollar is backed by.
Okay, great. Great point. Because what you're touching on is 100% correct. Money follows the gunboats, right? US is not just a capital markets based top-down organized system. The hegemony of the US is backed by massive global military power, right? Supremacy, global alliances, diplomatic power, hard power, soft power. And the US control system, like SWIFT, is used not because it's nice, but because it can. Like, let's go back to where you first started, the first time that we heard this seriously being discussed, when the Russians invaded Ukraine, right? Through financial sanctions, legal pressure, forced projection, China, on the other hand, has historically been a regional military power. It's focused mostly on immediate sphere in Asia. That is starting to change. China is rapidly expanding military capabilities, building massive naval fleets, cyber warfare, anti-satellite weapons, nuclear weapons, strategic bases. It's signing defense and trade agreements across Africa, the Middle East, Southeast Asia. It's creating this web of influence. Actually, the global hegemony and the reserve currency is backed by the military capacity of the country whose currency is being used.
Yeah. So we should wrap up on China now, but I think to be a true reserve currency backer, you don't just need capital in markets, you need the ability to enforce rules globally. And while the yuan is rising, it's still trapped inside a closed, fragile financial system. But I don't think along any of the kind of core dimensions we discussed there, it's a serious competitor to the dollar. But maybe we should turn in a slightly surprising direction, considering how down people normally are on Europe. But if not China, like, what about Europe? I mean, I think it may be a surprise to people, but the euro is actually already like the second most important currency in the world after the dollar. It counts for something like 20% of global foreign reserves. So
it's about right.
Okay, if we've decided that Xi Jinping isn't your guy, now imagine you are an Ursula von der Leyen booster. So what's the bullish case for the euro?
Please don't make me do this. Okay, well, look, Europe does have some real advantages. My throat is like constricting as I say this. But seriously, it has a huge, reasonably wealthy consumer market. It has independent institutions. I mean, look, the ECB, European Central Bank, say what you will about it. It's credible, professional. Compared to China, politically insulated. You know, it has the capital markets that investors like. And you can actually invest, move your money, you know, you can expect rule of law and protection when you do this. So the euro actually already has a major role in global trade finance. It's not crazy to think that it could eventually take on a bigger share. Potentially, yeah, there's space for the euro to take on more of this.
Yeah, I mean, one of the things I found interesting when we had the de-dollarization chat back in 2022 is that Russia held more euros than it did dollars in its reserves. You've touched on an important point there, which is just trust. Compared to China, the euro scores a lot higher. I mean, the European Central Bank is far from perfect, which is something we'll probably talk about on another episode, but it's professional, technocratic, it's pretty independent from day-to-day politics. Like,
deep capital markets, okay? Like, this is something that we talk about frequently, you and I, and most of the people in our network, because we complain about the lack of depth in European capital markets. But let's take a bigger perspective here, right? We're not just talking about the availability of venture capital or private equity. Europe has deep liquid markets. Here's the catch, but they're fragmented. This is where a lot of European investors feel the rub. When looking at a kind of more globalized version of this, maybe it's not that big of a problem, right? So unlike the US, Europe doesn't have this kind of single unified bond market. God, we could talk about bonds all day, every day at the minute. In Europe, instead, you have the German bonds, the French OATs, the Italian BTPs, priced differently, carrying different risk profiles, different spreads. And so the Eurozone is kind of like this hot mess of this land where borrowing costs vary dramatically, how you buy and sell really varies dramatically. And like, I mean, Jesus, the German 10-year bonds are yielding a nearly 2.5% at the minute. Compare that with the Italian 10-year bonds. You know, they're nearly double that. And this is in a very, very small geographic area.
Yeah, I mean, a few months until pretty recently, German bonds were yielding negatively. But yeah, how times change. I mean, we had the first ever European-wide like bond issues around COVID and around Ukraine reconstruction. And international investors did actually snap them up really quickly because Europe was seen as this kind of safe haven. And there's been like speculation that they might try and repeat this trick to pay for defense. But since market turmoil has been unleashed, that one seems to be cooling slightly for understandable reasons. But kind of moving beyond that, I mean, you touched on that kind of fragmentation and kind of vetocracy you get when it comes to kind of European-wide decision making really shone through during the 2008 financial crisis and the kind of 2010 to 2012 European sovereign debt, Eurozone sovereign debt crisis, capital just flooded out of weaker countries like Greece, Portugal, and Ireland and into safe havens like Germany. And yet, during the worst of the Eurozone crisis, Greek 10-year bonds yield spiked at about above 35%, which is like proper
Yeah.
collapse territory. So, like, until Europe has true fiscal union, shared debts, shared budgets, and shared political will, which, like, bluntly, all of European politics is basically trending in the reverse direction at the moment, where, you know, you have the
Yeah,
hard
for
right on
sure.
the rise in all of these countries. Many of these parties, like, you know, the Rassemblement National in France, were a few years ago withdrawal from the euro. Like, they've toned it down, but until Europe resolves these kinds of issues, like these huge cracks running through its capital markets.
This is exactly the problem in Europe at the minute. And it is a structural problem, which when you think about, like, can the euro scale to be the global leading currency? You know, the Eurozone cannot be a lender of last resort like the US can. And I keep going back to this for a reason, right? The US has a Federal Reserve. If panic hits, the Fed can, and has shown so many times that we're definitely going to do an episode on the Fed put, it will step in to backstop the market, flood the system with liquidity, stabilize the economy, and not just the US economy, the global economy. The ECB was just not built for that. I mean, it could barely bail out its own currency. Its legal mandate is so narrowly focused on one thing and one thing alone, which is preserving price stability, right? Keeping inflation in check, not bailing out member states. So during the Eurozone crisis, ECB eventually stepped in under massive political pressure with Draghi's kind of famous whatever it takes moment. But that was not automatic. It was really slow, really controversial, and it actually required rewriting of the rules. And let me tell you, politically, this was so unpopular that there's no mandate for the ECB to try to do this again or at larger scale.
So, you know, in America, a central bank can fire at the printing press and save the government. But yeah, that's basically.
And it does. We
pretty
see
much,
this all the time.
and it's basically illegal in Europe. So, yeah.
Right. Yeah, no, for sure. And if you're a global investor trying to figure out where to put your savings, what is the risk-free rate in the US versus Europe? If you know the likelihood of you getting bailed out in the US is nearly 1, and the likelihood of you getting bailed out in the Eurozone is not quite 1, that difference matters. Because when the storm hits, you need to know that the reserve currency has both the power and the political will to act instantly. And it really is instant. I mean, even in the last few weeks with the bond markets moving in very strange directions, the Fed stepped up and said, we're watching, we see you, we hear you, to the bond traders, don't worry. Going back to network effects, the euro has made kind of serious inroads. A lot of trade and finance is already denominated in euros, as you said, close to 20% of global trade. The Eurozone's collective economy is still one of the biggest in the world. We're a third of the market.
Yeah. But globally, the dollar still dominates, and like even Eurozone countries tend to settle major commodities like oil and gas in dollars and not euros. There is no euro system equivalent to how the dollar underpins global payment networks like SWIFT or corporate treasury operations, because historically there was no need, and basically just no one thought to build one.
But the Eurozone has always been happy with playing second fiddle to the US, right? And we see that not just fiscally, but also going back to military. There's very little military and geopolitical power to back up this currency, right? This is my day job thinking about this right now. This is where Europe seriously lags, right? There are some real structural reasons as to why China will not become the reserve currency, but China has military might that could actually push it one day into that realm. The EU has economic weight. It absolutely does not have unified hard power. It does not have a single army. It does not have a single command structure. Oh my God, it does not have this. Defense spending is so low compared to the US. The entire EU, they spend like $250 billion on defense per year. By comparison, the US spends over $900 billion annually.
Yeah, and as you say, it's not even that they don't have a single army or a single command structure. I mean, when you look at European-wide defense initiatives, they tend to devolve into an unseemly fracas about who's buying weapons from who and what gets manufactured in which country. The reason the US is so central to NATO is partly the US's huge financial commitment, but also the US actually like enforced like standardization and a kind of degree of strategic discipline, because the UK, France, or Germany was never going to do this by themselves. And when you add up all these European militaries, let's say we did have a single European army, which people have been pushing for on and off for a couple of decades now, there are just huge capabilities that will be missing. So the US has historically provided all of Europe's ballistic missile defense. It provides the vast majority of European sort of anti-submarine capabilities. The UK has some airlift kind of capabilities that other European countries would kill for. But when real crises hit, whether it's Ukraine or the Middle East, Europe relies intensely on American military protection. And the other point here is just global reach. The US has hundreds of military bases around the world, and there is just no comparable European presence. People dotted around near their former colonies, but even France is suddenly finding that it's becoming increasingly less welcome in sort of certain parts of West Africa. Until Europe has credible, unified military capacity and rebuilds its defense industrial base from nothing through sustained increases in spending, which there doesn't seem to be much political willpower for, maybe outside of Germany, it's going to struggle to project anything like the kind of hard power needed to back up a reserve currency at the global level.
Agree. Totally.
So if it's not China and it's not Europe, maybe the answer is that it's not a country at all. So we're going to go back to the future here and go to, make some libertarian bloggers very, very happy and talk about gold. So why are people talking about gold again, Sinead?
Well, there's a reason people are talking about it again. Gold, there's a much longer story here, but it really has been the foundation of the kind of global financial system for most of human history. At the minute, it's booming. I have many friends in hedge funds that said, in 20 plus years, I have not had gold in my portfolio until a month ago, 2 months ago, right? Gold prices have hit an all-time high, over $3,000 an ounce this month-ish. Central banks are buying hard assets, but especially gold, at the fastest pace since records began. Again, especially in countries like China, Turkey, India. And gold now makes up nearly 20% of total reported global central bank reserves, right? So you can see the appeal. Gold is neutral, nobody print more of it, it's scarce, it's liquid, there's a big, deep global market for it. And in a world where trust in governments is wobbling for all the reasons we just discussed, gold feels safe. It's nearly primal. And investors, hedge funds are literally like, what the fuck do we invest in? Where do we go? What are we doing? Gold.
Yeah, and gold historically did anchor the global monetary system. It underpinned like the global financial order between, the Bretton Woods system that was created after World War II was based on the dollar and a gold peg. You could always $35 would get you an ounce of gold or something, and they kind of preserved this until 1971, where there was sort of inflation-driven panic. Yeah, I mean, gold solves the trust problem by avoiding it entirely. You're not trusting a country or a central bank. You're trusting physics. A chunk of gold will still be a chunk of gold tomorrow. When faith in fiat currencies is looking shaky, that's powerful. But I have a hunch that there's going to be a little bit of a catch here.
Well, I just going back to the trust thing. I've never seen anything like it before. We now hate Jay Powell in the same way that we hated Fauci. But you're right. We're being real boomers. Like my mom with her credit card. I don't know what I'm spending because I can't see it. I need to touch it to know it exists. There is that element to it, especially if you are an emerging market and you don't find issuing countries trustworthy of reserve status. But here's the thing. Like the thing that makes it really great is also the thing that makes it terrible because it can't scale. There's a big market for global trading, but like how the hell do you park trillions of dollars of assets in physical gold without creating this massive storage, insurance? There's an actual physical problem with this, right? And liquidity headache. Let's say you needed to sell assets right now. Like who is actually going and fucking picking up your gold and moving it? I mean, the entire above ground stock of gold ever mined, right? I think slightly over 200,000 tons, which in today's prices is roughly 15 trillion dollars. That is a ton of money, but also by comparison, the US Treasury market alone is worth nearly double that, $30 trillion. Apart from the actual like logistical issues of this, if you tried to run the global financial markets through gold today, you couldn't. The system would collapse immediately.
Yeah. And this is why we're not all going to be carting gold around in barrels. You can't do interbank lending of gold.
Right.
You run into the immediate trouble as well. You need some kind of asset linked to the price of gold, and then you suddenly going to end up essentially reinventing the current banking system, which governments can very easily like push around if they want to. And there's a kind of another issue is that if you're trying to reduce the impact or the influence of the US on your economy, the single biggest holder of gold in the world by absolutely miles is the US government. So,
Mhm.
followed by, I think, Germany and Italy. So, if you are trying to cut your ties with the West by moving in this direction, you're paradoxically giving the US government a huge amount of leverage by
Right.
another means.
I mean, the dollar is just not money, it's infrastructure. And none of that infrastructure is possible with gold. It's it's like gold is a store of value, but it's not this platform of infrastructure that the global economy needs.
But yes, if you can't trust governments, you can't trust paper, and you can't cast gold around everywhere,
Mhm.
maybe we trust rocks and barrels. And I think there are some people who are slightly more serious financial analysts than we are, if you can believe such a thing, who sort of think this like commodity backed world order is going to dawn. But I think it's fair to say we're both skeptical.
Right. Yeah. So commodity backed reserve currency. So this idea kind of came from Sultan Pozar. By the way, this is one of my favorite ideas to geek out on. He wrote a well-known white paper a while back when he was still at Credit Suisse, and he discussed the move from insider money to outsider money. And that really is looking at commodity backed currencies, right? So oil for one deals and gold backed. Even proposals to create baskets of commodities, so like oil, copper, wheat as the new financial anchor. And the emotional appeal is kind of obvious. The world is batshit crazy today. Why not tie your money to something real that feels like safety, right?
That makes sense. But at the same time, like tying your money to commodities doesn't exactly eliminate trust issues. I mean, it's fair to say that the commodities trade is not
Wait,
exactly the most
you don't trust all these emerging market governments that
yeah,
create the
yeah,
commodities?
a famously neutral, fair, non-rigged market. The oil price is famously not rigged by an incredibly powerful cartel that, like, randomly chokes supply off periodically when it feels like driving up the price. So yes, you've got to trust that the commodities will be priced fairly. Oil obviously gets politicized. China and Russia
Right.
will just mess around with rare metals or the uranium price when they feel like it. You've got to then trust that governments won't rig or weaponized supply chains, that war sanctions or blockades then won't make the whole system seize up. I mean, oil price recently has been like a kind of heart rate monitor for someone on like cocaine. So imagine trying to run a national economy off a currency that rises and falls every time a pipeline blows up, and that seems to be happening more often these days for some reason.
It's definitely happening more often than not. And how deep and stable are these markets, right? Like, think about the weather. Like, our weather is becoming more volatile. Our commodities are becoming, the pricing and the availability of them is becoming more volatile. Thinking about like commodity backed lending, it is not without its own frictions, right? And it tends to kind of lock these economies into boom bust cycles based on literal physical flows of assets and highly speculative swings. And again, going back to Chinese on-based swap lines, this is one of the problems that China faces in its swap lines, that a lot of the repayments are based on these boom bust cycle physical flows of assets, and it doesn't work out that well for them.
Do you remember when oil prices went negative in like March 2020 in that fun era? So yeah, imagine trying to fund 30-year mortgages off oil futures.
Commodity backed money has none of the infrastructure that the dollar has.
No, and we've talked a bit about military power. Hard assets don't project force, and some of the countries that have the biggest
The
collections of
soybeans are coming to fight you.
yeah, I'm now trying to imagine like a kind of global military order based on who holds the most like soybeans or whatever, and it becomes like very kind of chaotic very quickly. Yeah, I don't know. Maybe we're not giving like Zoltan like the fairest account of his argument, but I'm sure he would be able to counter these objections if he's here, and if he's
Oh,
like he's very welcome to come on the podcast. I think these might work as insurance policies between states, but they're not building a global financial system.
right. And it's not just individual countries that are looking for alternatives to the USD and thinking about which are the countries that are emerging market that are using Chinese swap lines, or that might even be commodity backed. You've got new groupings of countries that might be trying to get in there too, like BRICS. And the emergence of these new blocks that can trade, settle payments, supposedly finance development outside of the dollar system, we'll see, like Brazil, Russia, India, China, South Africa, Saudi Arabia, Egypt. I think Trump famously forgot one of them recently.
Yeah, I mean, this is like, I'm gonna be blunt. This is the dumbest fucking thing ever. Like, I am so bored of like
Alex,
clowns.
tell me how you really feel about this.
So these clowns on Twitter and Substack who for like every year have been like, this is the year the dollar ends.
I don't know what you're talking about.
This thing is
everyone on Twitter
BRICS.
is so smart.
And it's like, it's always just like, you know, some like meaningless cooperation agreement has been signed and it's like the end of the dollar as we know it. Like BRICS, so BRICS was essentially, it was originally a term that was coined by Jim O'Neill, who was at Goldman Sachs at the time, back in 2002. And it was just like Brazil, Russia, India, and China are rising economies. They kind of responded by then holding this little like get together every year. And then some other countries got like, and so South Africa, and then the others, as you alluded to.
Sorry, I think the official term now is BRICS Plus.
Yeah.
I mean, we don't want to forget about any of the...
And none of these agreements have ever gone anywhere. So they created like an IMF alternative that never did anything. They created a World Bank alternative that never did anything. And it's not really surprising these things have never done anything because other than not being American, these countries don't really have a lot of interests in common. India and China, for a start, are major geopolitical rivals. People have died in border clashes between the two countries. You have some countries on the list who are like committed to democracy, even if flawed democracy. It's never quite clear what people think this thing is going to get stitched together into, especially as, yes, the financial infrastructure that we keep being promised sort of doesn't exist beyond some theoretical agreements.
Right. BRICS is great at headlines, not so great at hard power, really any power in this domain. So, okay, where does this leave us? I guess the story isn't that the dollar is about to disappear overnight, clearly. And oh my God, I was teaching a defense economics seminar. To the topic I was discussing, everybody only wanted to know, is Bitcoin going to become the global reserve currency? No. Like, no. The dollar is not going to disappear overnight. And that is very clear. But the story is that for the first time in decades, there actually are some kind of serious structural reasons to think that the dollar is fraying at the edges, not disappearing, but fraying at the edges. But none of the alternatives that we've discussed, like the Yuan, Euro, gold, commodities, BRICS, they're not going to step into the dollar role today, even tomorrow.
Yeah, and if anyone here, I mean, no one is listening this far, but if you are, and you are also a Bitcoin fan, explain to us how you would be able to make transactions on that scale remotely kind of economically efficient or viable. Yeah. Anyway, reserve currency status isn't just being about being big, valuable, and shiny, although all of those things probably do help. It's about trust, scale, networks, and power all at once. And even if it might be fading slightly, the dollar still ticks more of those boxes than anything else. And I mean, even with the current turbulence we're seeing, the dollar is sitting at, in 2020, the value it was at like 3 years ago. It's not a 30-year low, it's a 3-year low.
Right.
So I'm not convinced that anything is going to come close to ticking like even one of those boxes more than the dollar, let alone like most of them.
Right. But I guess against that backdrop, right, that's not to say that things aren't changing. So I think what we can say is definitively true is that we are moving towards this much messier kind of multipolar world where I think the dollar will absolutely remain dominant, but not unchallenged, whether that's on purpose by the yuan or even people talk about it passively like the euro, where trust has to be earned, not assumed. And I think that's going to be the first big issue with any of the challenges that we're seeing at the minute.
Yeah, and if that's true, then this time it might be different just a little bit.
Okay.
Yeah, I think, Sinead, should we leave it there?
Yeah, we could talk about this literally all day at night, but we won't. Thank you for listening to, but this time it's different, again, to the one person who made it.
Yeah, if you realised Bill Wang was a major holder in a stock you've invested in, rethink your choices. Bye.
Bye.